Talking about shareholders of controlled foreign corporations, CFCs, under U.S. tax law, specifically under the IRC, this section, you don't need to know that section. A shareholder of a controlled foreign corporation is considered a U.S. shareholder if the shareholder is a U.S. person who owns, directly, indirectly, or constructively, at least 10% of the total combined voting power of all classes of stock entitled to vote, or 10% of the total value of all classes of stock in the CFC. It's a sort of eligibility criteria item to know. A U.S. person, as defined by this IRC section, includes U.S. citizens, residents, domestic partnerships, domestic corporations, and certain estates and trusts. The 10% ownership threshold is significant because U.S. shareholders of a CFC may be subject to U.S. taxation on certain types of undistributed income earned by the CFC, also known as Subpart F income. Told you we'd see that eventually, even if the income is not distributed to the shareholders. The purpose of these rules is to prevent U.S. persons from deferring U.S. taxation by holding income-producing assets through foreign corporations in low-tax jurisdictions, by attributing certain types of income, of undistributed income earned by the CFC to its U.S. shareholders. The U.S. tax system aims to limit the tax deferral opportunities for U.S. persons using foreign corporations. So all of these, as we're seeing, these are just different ways the IRS is trying to make sure that money gets back to the U.S. and gets taxed. We've got an example here. Well, on May 1st, year 2, Rose Corporation, which we see here as a CFC, purchases $900,000 of common stock in Hamilton Corporation, which is a U.S. corporation. Now, prior to the purchase, Rose Corporation's U.S. property investments totaled $1. Okay, interesting there. We probably have some sort of tax manipulation going on if it's literally only $1. Now, Rose Corporation has undistributed earnings of $700,000 for year 2. In order to calculate Rose Corporation's increase in earnings invested in U.S. property for year 2, we need to consider the lesser of the following. Well, what are our two items? We've got the excess of Rose Corporation's U.S. property investments over its priority U.S. property investments, which is $900,000. The current investment minus the $1, which is the prior investment. That gives us a total of $899,999,999. Just love when numbers go on and on with the same amount. Now, just as a general reminder, is that anytime you see a lesser of item in any of these, it pops up throughout most of the entire course, that's the IRS trying to catch you. It's like you choose the lesser of these two, right? Now, if that's for a benefit, think of the IRS. If it's something for a gain, and it choose the greater of the two, right? So that's something the IRS would want you to possibly do. So the lesser of or the greater of, whenever that appears throughout anything throughout the entire course, that's the IRS trying to get you to choose the option that's less preferential for you. Next, Rose Corporation's applicable earnings for year 2, which is $700,000. We do simple math here. We see the lesser is $700,000. Since the second amount is the lesser of the two, this is going to represent Rose Corporation's increase in earnings invested in U.S. property for year 2. Now, in this example, the U.S. shareholders of Rose Corp would be subject to U.S. taxation on the $700,000 increase in earnings. Gotta love examples, seeing more practical ones more and more as we go along.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.